So, getting down to the fun. I think everyone knows who I am, hopefully, fingers crossed. Right, I'm just going to do a little PowerPoint at the beginning, just to give a bit of overview of what we're trying to achieve. What is the Financial Freedom Club? The agenda, 4 areas that you need to master to become financially free, today's focus, and a little Q&A. The thing I've realized with a lot of people is we have so many aspects of becoming financially free. People struggle to actually know what the steps are and how to implement the steps. So me and the team were like, how do we help everyone, especially our clients and anyone else who's going to be reviewing or watching this, in a structured way that they can sort of get a feel for the steps they need to do. And it's not always easy, and there's a lot of aspects to it. So this is my attempt to hopefully help people on that journey. This is the way I look at financially being free. And we've got a quiz as well, which I'm going to jump onto, or Alfie will jump onto later. 4 areas that you sort of got to try to master or try to put a plan in place. Personal finance, which we're going to touch today. Secondly, business finance. Thirdly, wealth and assets. And fourthly, retirement and legacy. And if you do all of these, you will unlock financial freedom, but it's a compound impact. So you've got to do a bit as you go along on all these different aspects. Develop a bit of a blueprint. That's why we've done a financial freedom quiz that if anyone has done or can do post this, is a few-minute assessment that you can do for free, and then find out your position where you are. So hopefully that will then help. Today's focus, personal finance, and I'm doing a little personal finance cash flow. I know everyone loves a spreadsheet, so I've put one together, and at the end we'll do like a Q&A. So hopefully that sort of makes sense to everybody. So now I'm going to jump onto our front area, one of these. So I don't know how everyone else is, but one of the things I and the team commonly come across is a personal budget or personal finance tracker that you can do for your cash flow on a monthly basis. It's not the most sexiest side of business, but it's so important, because if you've been a client of ours or you've had businesses for a little while, one of the issues that you'll realize is something called director loan. And this director loan aspect is quite a difficult bit, because what happens with people is that they don't really understand what they need to take from the business, and that ultimately affects their personal cash flow and causes an overdrawn director loan account. I don't know if anyone's seen my post today on LinkedIn. This is the thing that I was trying to probably explain to people, is that if you have a little plan, and the plan's got to start with what is your costs, what's your income personally as an individual first. Because if you don't do that, what you'll do is you'll take loads of money, and I'm sure many of you will fall on this, you'll take loads of money from your business, and then you'll be your accountant, tax advisor, which happens to be us at the moment, will say, hold on, you're overdrawn. And you'll be like, what's he going on about? What's she going on about? And what they're going on about is you've taken too much money, and the business either hasn't got the profit or it hasn't been structured properly to take out. But if you knew what your expenses are, you would take what you need for all your activities. And this is the missing part. So I'm sort of I've done this template. Everyone on the attendees here and all other clients will get this for free, and a template through. And any feedback in the Q&A, any questions or anything you want added or taken away, let me know, and we can set that up, and we'll save this on the great site that Alfie and the team and Anya have developed on Kajabi, that anyone can access, where you'll have all of these different tools. Eventually there'll be a whole suite, this one being the start off, of all the different things that you can do. So I want to start with this, because if you don't, as I said, get this number right, what ends up happening, as I said, is you're taking too much money out, you didn't really need it, and you caused yourself a few problems, tax problems, your cash flow for your business is hurt. But it can be remedied, because if you know what your costs are. So I'm going to actually do the bottom half of this first, and I'm going to sort of talk through how we do it and how potentially it could help you. So what I've done is, people get a bit worried, but I've done these little drop down boxes. So there's something called a list sheet. And what this does is, for all the different columns, you can add stuff in, whatever you want for your own financials, and it will come up in this list sheet. These are like pre-populated because I've just put some in, but you could actually have anything there, whatever you wanted. If you wanted to add in something else here or something else here, so jokingly course, superstar royalties, it will come up. And I've designed it that way, so hopefully, if my spelling's all good, if I go here, there's superstar royalties. Can you see that? So you can put all your different types. I've just put certain ones here that I know are common, in the sense that, and I've sort of tried to do them with a gap so it sort of sticks out. I know your salary, and for anyone who's got limited companies, the money that you extract, or your employment, your salary go in here. You put a forecast. Let's say I'm just putting this as what is a tax efficient amount at the moment for your salary, or one of them anyway. I would just put 1,047. If that's your forecast, what you do afterwards, you do your actuals. And we'll go through all these different ones because there is different types of income. Some people get interest from the bank. You can whack that in here. It might be 20, 50 quid, depending on how good you are or how savvy you are. And you can populate this. This is what I call a forecast, i.e. what you think is going to happen in the month ahead. So really, I should really have July here, because that's what you're trying to do. And then what you would do at the end of July, you would go back and look at, did I actually earn that money? If I did, you can whack it there and it tells me my variance is nothing. If I've earned £50, I've actually got a £30 variance because it's actually better. And then you look into how do you get your forecast working. And it's a quick way of filling in what income you're getting from all different. I put other income because someone might have foreign income. There's so many different types of income. You can also, when you're doing a tax plan, or when your accountant tax file, which is us in this case, doing a tax plan, we can help structure and give you an idea so you end up getting your total, right? Some people have property income. This could be your home office or a rental that you got. Let's say you put £500 here. That's your net, as in what you're getting. And now we're building up all your income. I'm putting dividends here, say it's 2,000, 3,000. I'm going to put about 2.5 because everyone will know there's a little magic number called about annually 50 odd thousand, which you want to try to stay below if you can. So what we're doing is we're building up the income from this, and then we're knowing what's actually happening. And then we've got a way of going back. The income part is actually probably the easier part. The harder part is actually going through your expenses. So I put in on the list here all your costs. There could be so many more. I've even put like stuff for savings accounts and things like this. You can add to this to whatever you want. I don't know if anyone's got little ones, energy kids. I spent quite a bit of money on there. So I whacked that in. That was in my little one. The gym. It could be so many different types of costs. And I'm just going to put some in for a presentation perspective so you can actually see. So if I put the old gas, the electric, apologies anyone who's joining us. We've already started, but you will get the recording, so don't worry. So I'm just putting some sums in here, and you just put the numbers of what your gas electric is. And I know it will vary for everybody. So I'm just putting a couple hundred quid there. Electric has gone up quite a bit. Let's probably not talk about the political reasons for that, but it is quite a big cost. And the reason why I'm explaining this is as you go down, you'll start realizing I'm calling these fixed costs, right? In the sense that I know they're going to come every month. And that's why I put them over here. And you can play around between variable and fixed costs as much as you want. right? Depending on your circumstances. That's why I've done them. So you could copy this over here and vice versa. If you own your own property, rent, or mortgage in this case, it'd be either one. So you can type it in, type Emma, and there it comes up. Let's say your mortgage is £1,000. This is what's leaving your bank account on a monthly basis. And what we're trying to get, Phil, is what is our fixed costs? I know I've done a bit of a list because everyone's is different. You can actually do it. I've left gaps so it looks easier to do. Then I'm jumping on to variable costs because we'll be here for a while going through all the different variables or different fixed costs. If we go over variable costs, what I'm looking here is, and I'll go onto this sheet, is what am I able to change? What I mean by that is credit cards, hopefully, are not long-term costs. You should be able to manage those. So if I put in good old Lloyd's MasterCard, you can see that one of the variables is not working, but you can do there it is. I don't know why that's not done that. Let's whack it up there. So you can put your different credit cards in here. You can change these according to whatever you feel you want. I've got MBNA. There's a whole list here. I'm sure there's pretty more for everyone else, unfortunately. But I put these so I can actually track what is going in my income, my fixed costs, my variable costs. And what I do here, everyone, is I put down what is my monthly payment. And the reason why I say variable, because it could be your minimum payment, it could be the whole balance or in between. You choose, but if you don't know how much income you have to put in your bank account, you don't know how much you're going to pay back of these. So if I say it's 100 quid a month, right? I normally have, and say I've got two balances out there, and I've got two £100 ones there. So I'm going to put that, these are my variable costs. I'm also going to whack in a savings account, and there's a reason for all this fun. It's because what we're trying to get to is that we have all our costs covered. And now you can see there's loads of different aspects here, or all these different ones. I've actually put savings in my fixed actually, and there's a reason why I put it in there, because I want to make sure I do it every month. But you could actually put it in your variables if that is something you want to do. And you whack 100 quid in, whatever it is that you're going to do. Ultimately, what you're trying to get to is what is your net cash flow. I will get onto tax near the end because I know everyone's looking forward to that one. I've got something called accruals. It's a bit of a technical term, but what it is what I pay annually. I want to put some money aside monthly for it. So car insurance, and everyone's probably gone up a lot more than what it used to be. So this is my aspect. Everyone's got different stuff. It could be AA membership here. Let's say it's gone up probably £10 a month now. And what I've done here is I've done like what my forecast, the templated amount is. You can call it forecast actually, what I believe it's going to be. And at the end of the year, I can change this or do that. It's just to tell you what you planned. This is like your annual cost. So this is like basically divided by 12. And what I've done on this is I've made it feed through here. Because ultimately what we're trying to get to is what our total expenditure is. Our total expenditure is our fixed costs, plus our variable costs, plus our annual stuff that we're putting aside on a monthly basis. I've called them total accruals, and that gives me my total expenditure. You might have noticed that these numbers here, obviously a deliberate mistake, these should be minus. And the reason being is obviously when you add them all up, this is what will add up to all your expenses down here, and it will give you your what your closing balance is. The closing balance is just your total income less your expenditure. hence why if I do this over here, and I'm going to be cheeky here, I'm going to copy this all over to here. And what we end up seeing down here is what my expenditure is and what my closing balance is. The closing balance is so important because ultimately that's my net cash flow. You can also put your bank balances in here, whatever your bank balance was at the start of the month. If it's, say, you got 5,000 in there, it will work this out. And what it will do is it will actually work out what the amounts are. And then you have your total balance. I put more than one bank account. The reason being is that people have so many different ones, and it's recommendable, to be honest, have more than one bank account with different banks for a number of reasons. The bit that I'm going to leave to the end here is where does the money go into? And in the list sheet, this was your first column. So you can put your different banks here, and all you do is do a drop down. So in this case, I'm going to say everything is Santander. So I'm going to just click here, click here, click here, click here. And what's happening now is that when I'm looking at my bank balance, it's telling me what's actually happening. So I'm actually going to keep this quite, hopefully, a lot simple. And what I'm going to do here is I'm just basically all the costs that I put, I'm just putting them here. And what's happening here now is when I go down to the bottom, this added to that will actually, and I'll put this one here because this is quite important, will actually, and we'll get all the numbers checked, it will tell me what I've actually earned and what my net cash flow actually ends up being. And this is so important because what people generally don't know is this number here, what the closing balance, i.e. what's my net cash flow. But by understanding the different incomes that they're earning, the different costs that they're earning, what they're actually starting to do is build up a picture. As I said over here, the accruals, what I say is your annual costs by monthly. I just recap on that. You can put these in, and these are linked to the sheet as well. You can put different things here, you can add them in, whichever suits you. You can whack them all in and then actually make sure the numbers all add up for yourself, because everyone will have different types of cost. MOT is probably more than £5 a month. It's probably about, say, depending what car you got, probably about £30. I know a few people will be chuckling around that. It depends on your vehicle, your gym membership, all these different things. AA depends, even a holiday. I think you're probably, depending on how big your family is, you probably need to put at least 100 quid probably aside for that, or 200. Let's say 200 if you've got a nice holiday planned. And what it's actually doing is it's feeding through to here, and you'll actually see down here what it's actually doing. So this is quite important that you understand this sheet here, and I've tried to do it so you just literally just do a drop down and it's feeding it all through. Then you look at the balances. I've also put something a bit more here is if you've got credit cards, and one of the issues I've always had is keeping track with all these. So what we've done on this sheet here is I've just done a list of all the different credit cards and loans and savings accounts, or current accounts in the case here. And what we're actually trying to achieve is that what we're trying to make sure is that you know your list of all your debts. Because if you know the list of all your debts, you can then manage them. Because if you don't manage them, what happens is they start building up on you. I put some stuff here because one of your best tools is, I don't know if anyone's done transfer balances. So I just put one here in for transfer balances. I would always keep a log of your transfer balances because that is a good way to manage your interest cost on any debt, because everyone will start in a different level. Most people, unfortunately, in the UK have probably got some credit card debt. It can be good if you know how to use the money, but if you spend it on expenses and you didn't know, you can put the credit cards in here and there'll be a drop down on these, and you can then work them through and then put your balance transfers what you did, so you know when to clear them. I put a column up here. This automatically does today's date and then works on from 30 days from now. The reason why it does that is these columns will become change color. That's just to tell you when you're doing it in a month in advance, you know which balance transfers are finishing. You either A, transfer the balances for your credit card onto another one, or you clear it off. Otherwise you'll get killed on interest. And I think that's what a lot of people struggle with. And we can probably do something about personal credit scores and all those aspects later, not on this session, on a separate session, because personal credit is so big these days, and especially if you're investing, or you're doing investing into your business, into property, into different assets. Knowing how to use personal credit is quite big. And I don't know if anyone is got their own personal credit app. I would recommend a personal credit app. Download one. The one I recommend is something called ClearScore, and I'll try to quickly show that one on here. If you haven't got it, it's free. I would recommend it. It's that one there. If you can see, it's going to be big. That one there is called ClearScore. Download that. And when we do a session on this, we'll go through how to manage your personal credit. But what I want to do, is starting point is this, and actually show people how to track. I put a lot of options here. You can just go really minimal and just do the basic ones. Look at your personal bank account, work out all the stuff, so you don't need all these columns. You can just delete loads and do them. The reason why I've done this is because people don't know how much they're going to have necessarily. So I'm doing a little cheat here. I don't know how good everyone's on the old Excel, but you can group it like this, and then it just gets rid of loads of stuff. As you're realizing, personal credit is so big, and personal cash flow is the result of all of this. If you don't, as I say, manage all of this, what you're going to end up having is taking too much money out of your business, or not enough, or not knowing how much this income number is. These income numbers are so important to cover these costs, and then what savings that you're going to do subsequently. We will, as I said, we'll send a detailed spreadsheet out. Also, I put a little action sheet, and the reason why I put this is you can put your month, describe your actions. I'm going to pay off my MBNA credit card this month. I'm just using that as an example. And then when you've done it, just put yes, done. Because what will happen is by the time you come back, you'll forget what your actions were and all the rest of it. And I think that is so important for everyone to understand what is the key driver for all your financials. So you prioritize. And I wanted to go through some strategies quickly, because time will be against us and everyone will have different levels of knowledge. But if you, for example, work out your cash flow, right, in your number, which is this number here that I've got, say 2,231 over here, and I'm looking at my actuals, they've come through, and I know what income I'm going to have every month. What I then want to do is, what debt do I want to concentrate? So if I have a list of all the credit that I've used, so you look at your balances on the thing, say I've got 5,000 on this credit card here. This will automatically populate some stuff at the top. And let's say I only had 5,000 credit, so I've got a credit available was 5,000, but I've got none left. Apologies. That will give me a balance of 5,000. I either attack this over a number of months, and therefore I can go over here and put in my credit card payments for that particular credit card an amount that I'm going to put in, or I can transfer, balance it, and use a different credit card to mitigate the interest. It depends on outside the zone. I know I've got the old Barclays Visa one. You can then put your details here of the date of the deal, what you've got with your credit card company. And what you do is, don't get disheartened, do one at a time. Attack credit cards by utilizing what is the highest interest. There is about 3 different strategies, and we'll probably do it when we're doing personal credit, but you can either do it that you attack one or that's got the highest amount, or you attack the one that's got the highest interest, or you attack the one that's got the lowest amount, so you can clear it off quicker. From my experience and knowledge, even though you pay more interest, the best one is to clear the one with the smallest balance if you can, because what happens is you get momentum. Momentum is so key in personal budget and personal finance. And what happens is then when you save that, you feel happy, and then you use that additional amount to clear the next one up. So there's different strategies in it, and we'll talk about this in the little Q&A that I want to get onto, because that'll be good for everyone to get different views and different questions that everyone wants to ask. I hope that makes sense. There is quite a bit in there, so I'm just going to recap. You put your different types of income. You put your different types of cost. You can put them either fixed or variable. Variable, as I said, I tend to put credit cards in. You can put your other stuff. Sometimes people have other expenses, that they just don't want to split out. They can whack them in there. The more you split out, it depends on you, more you get out of this. This here is your annual costs that you can split by putting your annual, splitting them by monthly. So you put some money aside so you don't have no nasty surprises. Ultimately, you end up with a closing balance, which will be your total cash flow. You can then manage all your different amounts going forward, and then you'll know what your position is. Really, really important. I know there's a few things there, and I know I've gone through it a bit quicker, but I'm trying to give you ideas on how you do this and literally get a process in place that you can do on a monthly basis that makes sense to you, to make sure you can get this number. This number here is the big one. I'm going to put it in orange. Knowing how much money do you need, because if I've got 2,200 and I don't really need all that, I can reduce my income here that I'm taking out of my business. That's one of the key drivers. So I don't need to take the full money out of the business because I know what my costs are, I know where I'm using them, and I've got a plan to deal with all the different costs. I hope that sort of makes sense, and I'm going to spend a bit of time on Q&A because it's always interesting to get different people's perspectives and what issues they're finding. So I'm going to stop sharing this now. Alfie has put into the chat, everyone, the financial freedom quiz. You guys can turn your cameras on if you want, or you can drop a question in the chat. Oop, there's a few chats thing there. So if you go in the chat, you'll see what we've done with this financial freedom quiz is the team has spent a bit of time with myself to develop a way to be able to evaluate those 4 different areas. So you get a score of where you want to get to, where you are now, and we've done it against averages and things like this. So it's a free report you get sent to you guys, and it hopefully will make a bit of a difference. So what I'm going to do now is for anyone who wants to now ask questions, I'm going to open it up. You can either drop in the chat, or you can unmute yourself and turn the cameras on. Whichever way you want to do it, I'm more than happy to do that, and then answer some of the questions that you'll probably have regarding the finances. Who wants to kick off the questions? Unless I put everyone to sleep on the challenges of financial freedom and especially personal finance. Alfie, did you say you got a question on some personal finances? So I'm gonna you can unmute and ask him. Oh, one message here. When I looked at the balance sheet, they didn't seem worth it after taking into account all the fees. Really good question, Vincent. It depends on when you get your Clear Score app. So for everyone who may have seen it on there, really good point, Val. I'll get onto him. So Vincent, really good point about transfer balances. I'll be honest with you, I've grown my business through transfer balances. The key is to think about how long the balance transfer is, because if you look at some of the fees, they vary between 1% all the way up to 5%, Vincent. And what happens is that if you look at that transfer balance, and if they spread over 2 or 3 years, and you can still get 29 months or 30 months transfer balances and still only charge you 2% fee up front. But if you think about you're getting 30 months, interest free, or 25 to 30 months, then they can be quite worthwhile, because when you're outside or you've just got a balance that you haven't paid back, the cost is can be up to 20 to 30% annually on interest, which is really high. So that's where they can be really good tools to either manage your exposure and then reduce your credit cost that you've got, or use it for some cash balances to then invest in your business or invest in what activity you're doing, provided you're investing in an asset. I emphasize that, because if you're investing in just a nice to have that you have, then you're just going to get more debt. I hope, Vincent, that sort of made sense. Great question, Annabelle, asking about dividends. Really, really good question. Thank you, Vincent. Regarding dividends, so what it becomes more and more important is your personal tax plan. So this is dependent on how well your business does, everyone. If you have a business and it's doing a certain amount of income, normally the conventional amount is about 50k, everyone, that we're trying to get individuals, but everyone's circumstances are different. Some people need 100k, some need less. What you're trying to do is work out your profit on the business, and then we do what we call a personal tax plan. What I was trying to achieve in this is to put a little amount that especially if you've got a business going on for 1 or 2 years and you know roughly what kind of cash flow you've got coming in the business, then you know that I can take this amount of money out on a regular basis to cover my expenses. Because what the biggest driver of issues I find for everyone is that they don't know what their expenses in their personal life is, and they take too much money out. I hope that makes sense. Regarding income, Annabelle, another question you asked, really good. Regarding income, it depends on whether you are running your own business or you're in employment. If you're in employment, then it's obviously your net salary, because what happens is the tax is taken before you get your salary. Can you influence it? Yes, because for example, if you do charity, I'm getting into tax mode here, everyone. If you do charity contributions and you're higher rate, you can actually claim back tax relief on a self-assessment or a different type of return that you can do for easy amounts. You can also, if you're putting money in pensions, the government top it up. And if you're a higher rate, you can then claim the additional amount back on your tax return as well. I hope that sort of answers that. Regarding the budget part, I think I sort of explained earlier, the budget part is back to how well your business is doing, speaking to us and saying to the right, I know I'm going to sort of make 40, 50 grand profit. How can we pull the money out in the most efficient way, and what do I need? So if I know my expenses, then I know what the income has to be, and then I need to make sure the business is giving me that income to cover my expenses or any of my investments that I'm doing personally. Annabelle, does that answer your question? And Val nicely said that, oh, he needs to re-watch this through. Yeah, we're going to record this and we're also going to send the template through. I wanted to just run through because as you know, one of the challenges is people just don't know what expenses they're incurring on a monthly basis, and therefore they're taking a bit too much money out of their business when they didn't need to. Because when you take money out of a business, even how great accountant tax advisor you got, it does trigger tax off. So sometimes it's like, do I need all that money? If I don't, then I have a forecast session and then maybe putting it into pensions or other tools which are going to then, for the rest of the blocks that I was talking about, assets, wealth, retirement, legacy, those can then help you generate cash flow more efficiently than consuming it by using it now. Any more questions, everyone? Oh, go on. That's a good one. What happens if I cannot repay an overdrawn director loan? The director loan account is one of the biggest issues that we've got. So hopefully one of the key reasons why I started with personal finance, everyone, is to give you an overview of what do I actually need from the business. The reason being is if I only need 2,000 a month, there's no point taking 3,000 out and then triggering a director loan, because the company, I would then owe the money to the company if there's cash in the company, and I may not have profits or salary or home office or some of the other tax planning tools to cover it. So the issue you're then going to have is if you haven't done a personal budget, not managed it, what ends up happening is that overdrawn director loan account is going to cause you two tax problems. The first one is the dreaded, we call it S455. And what that is basically 33.75% of whatever balance you owe to the business, you're going to have to pay, or the business is going to have to pay tax. You can claim it back, but HMRC hold your money. The second one, which has got a lot worse now, is you have to pay interest on your balance to your company. And HMRC get that interest as well. Those are quite painful, and they can be sorted out by having a personal budget and knowing what am I needing my money for, what do I need from my business, and then I make sure my profit in my business achieves that. And I think if you do it in that sequence, you will hopefully overcome the director loan account, or know it's about to happen and therefore put things in place before the accounts are submitted, not to have that painful S455 tax or trigger interest. Please note the interest is only triggered if it's over 10,000 balance. Does the company pay interest on directors' loans to the business? Love it, Vincent. Great question. Yes, you can. So one of the things that we have been doing with some clients, depending on if they're in the other position where the company owes them money and the money's in the bank account of the company, but you've got a positive director loan. Imagine you've been declaring 50 grand every year, but you've only been using 30 grand. So every year you've got a 20,000 balance. What you can do is actually set up a loan interest agreement and charge interest to the company. If your income is structured correctly, that interest can be tax deductible against the company, which it will be, and also tax free to you. Everybody in the UK gets about a 6k tax free allowance if their income is structured properly. So it's really powerful if you get the advice on that, Vincent, depending on your situation. It may be better to park the money in the company, which I do, to be honest, and charge interest and therefore get tax efficient amount. So you could potentially earn 18,500 a year or 19,000 if you add the 500 dividend on, tax free if you actually do it efficiently. And remember, loan interest has a double whammy. You don't pay personal tax potentially on it because it's an expense to the company, and you got a tax-free bucket that you can use. Vincent, has that answered your question? Excellent. Anyone else? Some fantastic questions coming out. I think the other bit, has everyone, if you do a thumbs up in the chat, has everyone actually do a personal budget of any sort, or have done that to track what costs they're incurring? Excellent. There's some people putting a thumbs up and saying they have. I think it's so important, and this is not. Listen, when I finished, I know it's a few years ago, but when I finished university, I was in quite a bit of debt, and that forced me to actually do a personal budget every month and do a personal cash flow, and it actually became like a monthly aspect. I've seen some thumbs downs as well. It's all good. This is why we want to go through all these different things, because one of the things I found, and why I'm doing this Financial Freedom Club, and I'm so thankful for the team and also everyone who's got onto the pilot, I know many are going to watch it later as well, is that people struggle because unless someone tells you how to do this or does it, people don't do it, and they then get themselves in a lot of trouble with the business, or they're using money, or they don't even know what they're spending their money on. The other thing I didn't mention is when you actually break down your costs, you soon realize there's stuff that you don't even use that you're paying money for, and it's been lost, and a lot of businesses rely on you not knowing. I was paying for a credit score app, and I was like, I don't really need that. I can get a free one which actually does everything. And it makes you focus on, do you need everything or not? So that's why I look at it on a monthly basis. And it's not been, everybody has a different skill set, but this is the cornerstone as we go through all the different parts of the journey to, as I say, unlock financial freedom, is that if you get your personal budget spot on, everyone, I am telling you, you will then have so much knowledge around what you're spending your money, what can you leave in your business, how can we create wealth, because ultimately what you want to do is having more money to invest in assets. This is the starting position, because if you're consuming all your money, you're not saving or investing in something that's going to create you cash flow. And if you think about it, whether it's 5, 10, 15, 20 years, whoever it is and whatever your strategy, I'm a big advocate of property as an investment class. But you've got to get your house in order first to have surplus money and not spend it on stuff that you probably didn't need, and hold yourself accountable, because ultimately it's not Z or anyone else can make the decision for you. It's what do you think is important? Do you really need all the stuff? If you don't, then invest it in pensions and things like this, and we can do some amazing stuff. I know some of the ladies and guys have seen what I've been talking about, and you can do things and you save a lot of money, because then you don't pay corporation tax, because dividends are profit after tax. You then don't pay personal tax, and right now we're taxed at the highest amount in history, not to depress anybody, since the Second World War, right? So the way you've got to do it is try to keep more of your money. And the only way you're going to do that is get your personal budget right first, understand what money you're spending on, what do you need, what you don't need in surplus, really quite important to invest that. One of the other things I did mention on my LinkedIn post I haven't mentioned is try to build up 6 months, that's 6 months of emergency budget. So those expenses in those current accounts, try to have that. And you can then put it in a savings account, whatever. But I try to build that, because you just don't know what's going to happen. And having an emergency fund, that's what we call it, is so big. And it's one of the cornerstones. So the first thing I did when I did a personal finance and budget, I built up an emergency fund. So me and my wife both have got a personal emergency plan. So if your expenses are, say, 2,000 a month, that means 12,000 you've got to hold back. Some people go more, but if you have 6 months, I think that's normally enough. to cover, and it also covers you if you've got something unexpected happens. If people own their own house, they've got children or a car and things like this, some things happen. So you have to have a little bit of an emergency fund put aside. By doing the personal budget, and that savings line will be huge, because you can start putting that and you could put it into an ISA, and you can do different things. You can get, obviously you think about getting some financial advice if you're going to do that, or even put it in a high interest savings account. There's loads of different ones out there. You can put that, and therefore you've got yourself covered. But number one thing, make that cash flow positive, i.e. you're having more money necessary. Try to put a bit aside so you get your personal sorted out, then focus on the business, and we'll go through all these different things, and that will make a huge difference to your journey. Because don't think about, oh, I've got to get to this amount, so and so. One of the things everyone, I know would be a common theme, do not compare yourself to anybody else. The only person you're in competition with is yourself, right? I've seen people who had hardly anything, and I talked about one of the podcasts I did, right? People have literally built wealth over a very short period of time, some people, because they're motivated, but they've done the work. All of this is no magic pill or anything like this. It's doing the work, putting stuff in place, understanding why you're doing that, getting advice from the different areas like personal finance, business, how am I going to do that, then invest in assets and retirement, get the balance right. And if you do that over a period of time, depending on your ambition, whether it's a 5, 10 year, 15, 20 year, the common one, to be honest, is between 10 and 20 years. You know, because different people move at different paces. If you've got a business, for example, that's cash flowing a lot, or you've got a job that's got a lot of income coming in, right, you can obviously achieve stuff quicker. But I've seen people create unbelievable amounts of wealth with a small income, because they've had a personal budget and they've been holding themselves to account on all the different costs they've got and income. And I'm not saying, and I've not put on there, but you still can have your takeaways and things like this, but you need to balance it, because what you consume now is going to affect what you can have in the future. And I think that's the point that I'm trying to get at. And as I mentioned, some of the problems and symptoms are, we're living in a society that everyone thinks about credit as in a way to create liabilities, not use credit to create assets. And I hope while I'm doing these sessions, as we go through all these different things, and if there's any particular ones that you want to cover, honestly, drop me a message. I'm always there for you guys. And I want to do it this way because one of the biggest feedbacks that I've constantly is, and this is just me, I try helping everybody, but it's impossible to have this intense sessions on all the different subjects individually. That's why we created this Financial Freedom Club, to do a roadmap, try to get people, so you've got a resource. We will save this down with the spreadsheets, different guides, and we're going to have them on there so people after this can go and do these, actually start implementing some of this stuff, giving us feedback, how it's affecting their experience, what else do they need support on, and we'll build up a whole suite of stuff. And that, for any of our clients, and a promise from me to everyone, is that will be a free access because you're our clients. There will be in the future, in 3 to 6 months time, people who are non-accountancy tax advisory clients. They will obviously have to be paid to be part of the club. But ultimately, for me, the key driver was our clients who are, finding different challenges, especially in the modern day right now with all the challenges in the world, to achieve financial freedom. Any other questions? I love the emojis, by the way. As you will see, I always put a lot of emojis. There is no silly questions by themselves. Honestly, whether you direct message me them or you put them in the chat, it doesn't really matter. Whatever you feel comfortable, I will. And if you want me to stay anonymous on your one, I won't mention your name, and I will try to, because I'll be honest with you, there'll be someone on here that's got a question and someone else asks them, they'll be like, thank you so much for asking that question, and they were a bit scared. Ooh, I think I've tired everyone out on the first one. Long Monday. So recap for anyone is we will send this out. Please do the quiz, which we put it in the chat, because that will give you your own personal score. And then when you're talking to me or the team, you can then know which areas you need to focus on. And Alfie's re-put the quiz back on. Don't you love it? And he's basically put a lot of time, effort in the team to help create this on areas that I feel that people struggle with all the years of doing finance, accountancy, tax. And I really, really hope you guys get value for this and we can build a community. I love that. I mean, do you know what? I've lived off credit card. I'm going to be honest with you, everyone. I would not have a business without understanding the credit system. When I started the business, that's how I financed my business. People did think it's a bit risky, but I was so confident, and it's everyone to their own. I used the credit to put into the business, and that credit is kept on growing because now I've got bigger director loans. My first 3 months, just to make everyone, I had 0 clients first 3 months, and I went from a very senior corporate role to this. And if I didn't have a loan or credit card, and I know there's also benefits, by the way, taking a personal loan if that is relevant and you get a good rate. I checked that you can, and I did a post on it recently. There's 2 ways to get a tax advantage for your company that way. So if you're transitioning from employment, have a chat with me before you do some of these things. Just make sure you know yourself, because you try not doing things that you're not sure about, right? And you try to get good people around you. Me and my team are always there for everyone on this call to try helping you on that journey. And then you try to make your best decision of whatever your business finance and your personal finance is looking at. I hope that's all good. We're going to finish off unless someone else got any other questions. Obviously, Vince has given a thumbs up, but hopefully everyone else has enjoyed the session. Excellent, excellent, everybody. And honestly, give feedback on the team. I'm going to save these down. We're going to do these quite regularly, minimum once a month. We might do them a bit more regularly initially to build up a suite. Any areas, everyone, you want us to cover, seriously, drop me a DM or private message or drop WhatsApp, whatever, and I will do a session on that if there's enough demand. Because ultimately, this is for you guys. This is the whole point of these. Take care. Thank you so much. Have a lovely Monday evening. Enjoy the sun. Hopefully there's still sun out and it doesn't always shine. So hopefully everyone enjoyed that. Thank you so much.